Hey, hello, welcome friends. This is Raj from Data. This is the market structure analysis for the week starting Jan 24, 2022, right? So let's get into the charts. So as we see here clearly, we are expecting a market pullback up to 14% for a couple of weeks now. It happened today, right? So as you see here, this is the starting point. This is the last new high, which is on November 22nd of last year, right? So from that point, market dropped from here to this point, which is close to 13.9, which is 14% approximately, right? And that's what we have been always expecting because after that there is no new highs. Market is not able to take any follow through after this new high. So and always the bulls are not able to defend. So that's what we have been expecting for quite some time, right? But as we see here, um, at this point, at this level, it is close to 7% from top to this point, right? It is 7%. And that 7% has been the play for a long time, right? Multiple times it hit the 7% and then bulls defended it successfully and they were able to make it up, and then they failed to go above the highs of November 2022, 22nd of November, right? So that tells us the bulls are there, but still they are so weak. And finally, what happened at this 7%? It got broke again the third time. So this is the first time it hit the 7% range, and then the second time 7% range, bulls were able to defend it, but not able to make a new high out of it. But the second time when the bulls were able to defend it, they were able to break this level, but still not able to make a new high, which is this level, right? They are not able to make a new high, right? And this time it fails the third time. So this is the third time 7%, right? And this time it came out of our bullish band, which is the white channel, what we see here, which is what we are clearly watching every time when the markets get back to this channel, lower end of this channel, it will show some resistance and then support and then go up, right? And that's what we always saw, and it never happened at the third time when bears bring it down, the bulls were not able to defend, right? So that's the clear point when we kind of posting in our Data WhatsApp group that this is going to happen. This 14% is very, very clear, which is going to come soon, right? So which I posted, if I'm not wrong, I posted that 14% on this date when the market hits this level. I said, yeah, there is a high likelihood that it could reach 14%, right? Because this is, remember, this is 7%, like, so this from here, top to this line is 7%, right? So it hit one time, second time it hit, that time itself we said, okay, there is a high likelihood that it could come to the next 7%, which is from this line to this line, right? So this is the next 7%, right? So that's what we have been expecting. Why? Because the price action is not clearly, on a bullish side, right? That is the reason, right? So here the price action came up to here, came up to here, came up to here, but never broke this highs, right? That is a clear evidence that still the markets are on a weaker side, right? And when this hits at this point, third time, I posted on the message that we are taking our 15% hedge as always, right? And when the market pulls back, we are still in with the hedge, okay? And clearly this time it dropped down to the expected 7%, right? So that sums up the total of 7. This is 7 and this is 7, right? So towards 14%, whatever we are expecting has happened already in the market, right? So now what is next, right? That's our next goal. What's going to happen next week? That's what we need to look for, right? So now it's clearly forming a trend line. If you look at this trend line, and one couple of things, right? One, yes, it's out of our bullish channel, clearly it is out of the bullish channel. One. Two, it's forming a new trend. It's a lower low, right? So it's a lower low, lower high, and then it made another lower low. So we are expecting the markets to make another lower high, which is most closely up to this trend line, right? This zone, right? This zone, right? This is the zone we are looking at. So the first symptoms, it is about out of our upward channel. Second symptom, all our three key levels, that L1, L2, L3, all are red. The third symptom is today is a big red candle after a long time. It's been with a gray color candle, as you see here. This is all gray candles. Gray candles means uncertainty or weak, right? Green candles means it's like we see some bulls in there, right? Gray means some bulls or bears mixed, but that alone is not good enough for take a decision, right? We take a decision based on multiple factors, what we see on the chart. So here, the first day it is a huge red. That says, okay, bears are in control. So how long? We don't know, right? So if this is a very, very key level, next key level, which is a 14% level, that is 14,400, which is what we have been watching for a long time. So our 15% hedge goes here, right? Our 15% hedge went here. Still we are on 15% hedge. Here, if the markets are not defended by the bulls here, market can very well easily come up to this level, this trend line level. Okay, so that is close to 1500 levels, right? Sorry, 15,100 levels, 15,100 levels. If the bulls are not able to push it above, then we are expecting the next drop, which is going to be a little bit bigger than what we expect, right? So this drop is going to be like this, right? That's what we are expecting. This could happen anytime before Feb, which is what we have been watching. As per the seasonality also, Feb is not a good month for markets always, mostly, like last 20 years. That's how it has been. So we could expect this drop if it fails, if the bulls fails to push above this level, right? This zone, then there is a higher probability that bears can push down up to this level, right? So this level is from market top. This level is close about 22%, okay? 22% down, right? 22% we are talking about, right? And again, same thing, right? So every place we don't take a decision based on the news, what's going to happen. We don't speculate markets, right? Oh, okay, the interest rates are gone, so it will happen like this. No, it's nothing happened based on any factors on the market, okay? Market, the global economic indicators are so weak, okay? We are printing a lot of money. There are a lot of bad news about the economy and stuff like that, but still we go by the price action clearly, right? So there are 100 newses coming out, but how it reacts in the chart is what we go by, right? So again, so we are in 15% hedge, good profits right now, right? So we will see what is the reaction at this zone, okay? When this zone is gotta act as a resistance, then we will take another 20% hedge at this level. Based on the reaction, we will take another 20% hedge, right, in this level. If it fails, if the bulls fails at this level, we'll take another 20% hedge. If the bulls are successful in this level, probably we will think about, see, if it closes strongly like this, right? So if it comes above this line and then get a support, if this line becomes a support, then we take the profit of 15% hedge what we took here and then leave it to run, okay? If it does not act as a support, if this resistance does not act as a support, right, then we are looking more downwards, right? This trend is going more downwards. There is a high probability. It's all probabilities, right? We can't say anything 100% accurate, or we can't predict the markets, right? It's all purely based on price action. So we watch the market at key levels, what is its reaction, and then take appropriate action. That's all we can do, right? So now the next level to watch. So as I'm clearly stating, we took the 15% hedge at this level. We are in a hedge 15% more. This is our 15% hedge, right? So we are at 15% hedge. So we are waiting for the market to pull up a little bit closer to this zone, right, and see how it reacts. Okay, if this becomes a support, like come out and then take a support here, then we will close this hedge, right? If this is not going to be a support, then we will let that hedge run. And also we take, if this becomes a resistance at this level, if markets are not able to pull above this level, then if it comes down like that, then we take a 20%, another 20% hedge at this level, right? So that will help us in a long run, right? Knowing what's going to happen on February, right? So if that happens, we'll take another 20%, and then if it breaks this level, we close this 20%. If it does not break this level, we'll keep it running, right? And wait for this to kind of come down to this level, right? At any time, right? So this could happen 1 month, 2 months, who knows? Nobody knows, right? But it is all based on how it reacts at this level, right? That is our key in takeaway, right? How it reacts on the key level. So overall, I would say the key levels to watch for, right? So that's the takeaway for us, right? The key levels which we have been watching for a long time is this 14,400 is one of the key levels which we are on target of 14,400, right? If you look at my video 4 weeks back, when we are here, 3 weeks back, I remember 3 weeks back, when we are at this point, I talked about this 14% level, okay? This is the level we are expecting the market to come back, okay? And it has happened today, right? And now, in this level, we look at the reaction, okay? So that is 14,400. We'll see how it reacts. And then we are expecting the market to just pull back up to this trend line. If it is not able to break this trend line, then we see more weakness. If more weakness is about to come, then we are looking at next key level of 1300, okay? 1300 is our next key level, as it states here, right? So 1300, right? That is 22% of pullback. And I'm not saying this is going to get over at this point, right? So it could go worse than this, but we are not expecting always the worst case scenario, right? So if it is not able to, if bulls are not able to defend this level, then we are looking at a bigger thing, right? So bigger crash, right? So from here to here, it is closed 35%. Anytime, this 35% is a high likelihood could happen, right? If the bulls are not able to break this trend line here, we are looking at 35% of correction, right? But anyway, we have to go by level, right? So we are not right at this level. We are only targeting the next immediate levels, right? So when we are at this level, when we are at this first level here, right? We always talked about the 14%, right? So when we are at this level, so when it happens multiple times, people ask me, why 14%, right? Yeah, the clear reason is market structure. Look at this. This is 7%. This is another 7%, right? Clearly. So there is a high likelihood that this can be covered, okay? So that's what. So 2 times when the market reaches this level, we expect, and there is no absolute power by the buyers to take off this recent highs, we predict that okay, the market can go up to this level very easily, which already happened. So now we are saying this level is our level to watch for. Now we are saying if the market does not pull back above this 50% correction, so this 50%, right? So this is our 50% here, right? So this line, if I draw minimum of 50% out right here, right? So if we put this line here, right? So this is 50% right there, right? So between these two lines, this is the 50%. If it cannot break this 50%, if it can break, well and good, but still we are expecting the markets to chop between this 7% range for some time. Okay, that all depends on how strong the bulls are, right? Like it can easily do some chopping here, like the way it did between these two levels, right? These two levels, exactly that is what happened. Okay, so the bulls are not strong, bears are don't know what to do, so it chopped like this. So same thing could happen here also, right? We can't predict that, right? But we can take some actions based on what happens on the chart, right? That's what we are doing, right? But if it breaks this level badly, right, then we are looking at this space to be bridged. Okay, this is another 7%, right? Another 7% is 21%, right? Totally from the top. 7. So this is 7, this is 7, this is another 7, right? 21% clearly, right? And that's exactly what we are looking at. Okay, if the market shows more weakness, our next target is 13,000, right? And once this level, if the market comes, same pattern could repeat, right? So the markets can chop between this and then go back down to this level, right? So that's what we are expecting clearly, right? So we are not saying this is how it will work, but based on what happens in the market, we will decide. Okay, so the key is our trend line here, right? So this is our trend line we drew recently. So if you look at this blue color trend line, right? So I'll change the color so that you can see it. I'll change it to yellow color. Okay, so this trend line is what we are going to watch for, right? This trend line. Okay, so this trend line is what we are going to watch for breakouts. Okay, if this trend has to reverse, this trend line has to be broken out, right? Otherwise we are downtrend, right? We are expecting more downtrend to come in days, right? And that's the key of it, right? This is purely again market structure analysis, right? So this key structure, how the market is structured based on the past, right? And then we take that numbers and play with that numbers. Okay, so I'll show one more quick statistics here. So okay, so this one we talked about, right? So this is our key market structures we talked, right? So this is the top, right? After that there is no new top. Okay, so now we are 14% down. Okay, the next is 21%, 35%. So these are all the 4 major levels we need to watch for the next 1 or 2 months timeline, right? And we look at the reactions. Again, I'm repeating, we look at the reactions at this key level and then see if it is able to break out this trend line and then take action, right? We only take action based on reaction. If there is no reaction, we are not acting on it, right? So we took our 15% hedge here based on the reaction. So I have not taken anything here, right? Because there is no reaction here. So as of now, it's just touched this line. I want to see more reaction here. So reaction meaning like some pullbacks, right? So like chopping here, around here, or just going up here, failing, and then I'll decide, oh, okay, so there is no absolute strength, so there are no buyers able to defend this level, then I'll take another 20%, right? That is how it goes, right? Then I'll take another 20%, let it run until this point, and after this point is reached, wait for reaction. So for example, if the market goes like this, and then this, then we wait for reaction, next reaction. What is the reaction? Oh, okay, so now I see the market came out like that. Okay, then I have to kind of think, okay, so now I have a 15% hedge here, 20% hedge here, which is, if a market comes to this level, it's at a great profit, all this 30%, 35% hedge, right? So probably I will close, if the market breaks out this trend line, I will close, take off some of the hedge, right? 15%, for example, right? I'll close 50% and let it run. The remaining 20%, let it run, okay? But if the reaction is not good at this point, okay, and then say, for example, if the market does this chopping, it comes here, chop, 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 come here, come down, and then it's not able to push again above, right? It's just going, and it's not going well above this trend line. Then it breaks this level, then I will take another 15%, no hesitation, right? Another 15%, because expecting the market to run to this level, right? So very simple. If it doesn't work out, we will close that hedge, right? So if I say, for example, not necessarily always it has to come to that level, right? If it comes up to this level and then chop, 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 and then breaks out, I'll close the 15% hedge, right? Very simple, right? So it is not that it has to always come to that level, but mostly it does. But if it does not, then we react. So here it is a reaction, clearly. There is no levels here, but it is a reaction. So it goes and chops, 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 and then take out our trend line, right? Then I'll close. So I have already taken 45% hedge, right? So sorry, 50% hedge. So I will close 15% hedge if it breaks above this trend line, right? So that's how the portfolio hedging will always help, okay? So you can do two types of hedging, but this is portfolio level hedging based on the beta calculations on your account. So you can do this types of hedging to kind of protect some losses from your portfolio, right? Cool. That's all for this week. Let's see how the market behaves next week. Based on that, we will review the markets next week. Thank you. Take care. Happy trading.